Hello everyone, and welcome to today's Dynamics 365 Tech Talk, where today's topic is Dynamics 365 Finance Asset Leasing. My name is Evan, and I'll be your moderator today. We are broadcasting this web conference through Teams live events, and the audio can be heard through your device speakers. Today's web conference is being recorded on behalf of the Microsoft Corporation, and by participating in the session using Microsoft Teams, your name, email address, phone number, and/or title may be viewable by other session participants. If you do not consent to being a part of a recorded session, please disconnect at this time. The recording will be available on the Tech Talks Community Dynamics page within 5 business days. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions throughout the event. Thank you for your patience during these announcements. Now on to the presentation. Presenting for us from Microsoft, we have Mohamed Aamer, Senior Program Manager, and Avinash Kesani, Software Engineering Lead. Mohamed, over to you.
Thanks, Evan. Good morning and good afternoon for everybody. Thank you for joining this session where we are going to cover the asset leasing module in Dynamics 365 Finance. Our agenda today, we are going to look at the capabilities of the asset leasing and what do we cover and what do we support in the new module. Also, we will walk through the asset leasing classification test and how the system classify the asset to determine if the lease is finance lease, operating lease, low value lease, and so on. Also, we will look at the asset leasing components in the module, and we will cover some of the integration scenarios in the asset leasing with the fixed assets and accounts payable. And I will try to spend most of the time on a live demo. I am sure you all are excited about it. So the capabilities of the asset leasing, mainly it covers the leasing accounting side, where we lease the asset and then we are going to pay on a monthly basis or quarterly basis to the lessor or the vendor who already owns the lease. So from the finance perspective, we are complying with the accounting standard IFRS and ASC 842. And this is the new accounting standard that have been changed a while ago. Before the IFRS 16 and the ASC 842, the leasing or the leased assets were recorded as off-balance sheet. After this new accounting standard, the leased assets need to be recorded in the balance sheet accounts. In other words, it should be capitalized in the right of use asset account. Then we are supporting the dual currency, where we can record the lease in transaction currency, and of course it will be translated to accounting currency and reporting currency. Also, we are supporting the dual reporting, where the lease could be posted to the different posting layers that are supported by Dynamics 365, the current layer, operating layer, tax, and the different custom layers. The asset leasing helping you to automate the business process for the asset leasing. After you record the asset lease or the leased asset to your in the system will classify the lease automatically. And of course, this is a decision in the implementation itself. If we want to let the system to determine the lease type for us and do this lease classification test automatically, for us, or we need to identify the lease, either it is operating lease or finance lease. Also, the system automates the calculation of the present value or the calculation of the initial right of use asset, which is a complex calculation to calculate the present value of our payment. It takes the lease term, the incremental borrowing rate, and the payments, and then using the automatic calculation to calculate the present value. Of course, the asset leasing, it generates the financial or accounting transactions in a form of a asset leasing journal. And the module is integrated, of course, with the chart of accounts through posting profile. And the type of transactions, we have different sets of the transactions. We have transactions related to the lease or that impact the right of use asset and lease liability. And we have the administration or executory cost transactions, like administration cost, common data, common areas, expenses, and so on. We have integration with fixed assets, where you can link the lease to a fixed asset ID, and this will represent or will be translated in the fixed assets module as acquisition. And then you need to run the transactions of the depreciation in the fixed assets and the other transactions related to the lease payment and interest in the asset leasing. Also, we can link the lease to a vendor from accounts payable, and this vendor will represent the lessor, where we are going to pay in each period. And of course, the financial dimensions and data entities to import and export data from and to the system. So the asset leasing helps you to streamline your business processes from the lease creation, the classification test, and as well as the posting. Moving to the lease classification test, firstly, we have different types of leases or lease types. We have the low value and short-term lease, and both are posted to income statement accounts for IFRS 16 and ASC 842. So we define in the system the thresholds that if we meet this criteria, the system will decide, okay, this is a low value lease or a short-term lease. And if it does not meet that criteria, we will move to the next or the other subsequent classification tests to determine if the lease is operating lease or finance lease. We have mainly 5 classification tests that run in the system background or behind the scenes. The transfer of ownership, if this lease will be transferred at the end of the lease term, will be transferred to the lessee, or if there is a purchase option, if I can purchase this building or this car after the lease term. Also, we have the lease term and present value thresholds and the unique asset. If any of these criteria have been met, the lease will be classified as finance lease. Other than that, it will be classified as operating lease. All finance leases in IFRS 16 or US GAAP will be posted to the balance sheet, and we have other transactions posted to the income statement. For operating lease, it is only posted, or it is only supported for IFRS, for AC 842. So from technical point of view in the system will still may show you the operating lease for the IFRS, but in the background, it will always run the finance lease logic, because we do not support the the operating lease for IFRS. I will double click and going to look at the components of the asset lease. So we have the lease book, and this is where all transactions are posted on the lease. So we have the lease, and each lease could have more than one book, and there's no limit for the number of books that could be associated to the lease. And in this book, we have the lease information that coming from the lease contract or management decisions related to the asset useful life, the asset fair value. Also, we have the annuity type, if we are going to pay at the beginning of the period, at the end of the period, the implicit rate, the incremental borrowing rate, or the interest rate, the compounding interval, if it is monthly, quarterly, and so on, and the commencement date, when we are going to start this lease. And this is the first date of the lease. And then we have in the payment schedule line, or the payment contract, we have the start date of the lease, which will equal to the commencement date, or could be later than commencement date, but it will not be earlier than commencement date. Then we have the payment interval and periods. If we are going to pay quarterly, semi-annually, annually, or monthly. Then we have the end date and the payment frequency. This will be translated in the system to a payment schedule. In the payment schedule, we have the periods, and then we have months, and the payment amount for each period or each month. And then we have the present value calculated, and this present value will be taken to post or to create the initial recognition transaction. Then we have the lease book, and we can consider the lease book as the brain of the lease module, or the lease itself, where we identify the accounting framework, either it is IFRS 16 or US GAAP, and the lease type, either it is operating lease or finance lease. And this is, as I say, I pre-configure this book to be always operating lease or always finance lease. If I set this automatic, I will need to identify the thresholds for the lease term, the present value, the short-term lease, and low value lease. And here, the system will do the logic to determine the lease type. Then we have the lease classification and the transaction. So as we see, we have mainly 4 types of transactions for each lease type. For the operating, to be precise, for operating lease and finance lease, and short-term lease and low-value lease, we only have the lease payment. So let's start with the initial recognition. In the initial recognition, this is the first transaction that increase the right of use asset account, which we are debiting the ROU or the right of use asset account, and increase the lease liability. Of course, both accounts are balance sheet accounts. Then we will move to the interest expense or liability amortization transaction, where we increase the lease liability by the monthly interest amount, and then in the lease payment, we decrease the lease liability. So at the end of the lease life, the lease liability account will be zero, or will be after the lease payment, it will be the netting of the initial recognition and interest expense transaction. Finally, we have the depreciation, where we depreciate the lease itself, and this is crediting the accumulated depreciation and debiting the depreciation expense for finance lease and for operating lease. In US GAAP, we are debiting the lease expense. Of course, all these accounts are configured in the posting profile. This is just a high level of the posting mechanism and the asset leasing. For short-term lease or low-value leases, they are just an expense accounts, and the credit side is payment clearing, or it could be the vendor ID if I link the vendor to the lease. And of course, this is the same for finance lease or operating lease. If I link a vendor to a lease, the credit side could be the accounts payable account. And if I link the lease to a fixed asset, instead of the, or not instead of, in the initial recognition transaction, it will acquire the fixed asset ID, and this fixed asset ID should be posted to the right of use asset through the posting profile of the fixed assets. So it will be debit the asset ID, and this asset ID will call the right of use asset from the fixed assets posting profile, and the credit side is the lease liability. Moving on, the process itself, as we spoke, we have the lessor, then we have an agreement between the lessor who own the asset and the lessee, identify or capture the lease data and the payment, run the classification test. Then we have the payment schedule. In the payment schedule, we have the present value. Then we are kicking off the lease transaction by posting the initial recognition. And then on each month, we will have the liability amortization or interest transaction, the payment, lease depreciation, and also we have 3 different transactions: the lease adjustment, if we want to adjust the lease for any business reason, and if we want to impair the lease or run the index revaluation. Of course, all transactions are posted to general ledger, and as I mentioned before, I can integrate the lease with fixed asset or accounts payable. So what we are covering in asset leasing module, this is starting from the lease master data, the payment, the lease classification till the end. I will be moving on what we are doing on that system itself. So when we create the lease, then we create schedule. When we do the create schedule, the system will create the book, the lease books, based on the lease group, because we define the lease group, And then in each lease group, we can identify the lease box will be used for this group. So, of course, the lease group is a mandatory field in the lease creation form. And the system from this piece of information can determine which box need to be associated to this lease. Then, after the system create the box for this lease, we'll run the classification test to determine if the lease is finance lease, operating lease, short-term lease, or low-value lease, and calculate the present value and create 3 different schedules: lease payment, liability amortization, and depreciation. After I review all the information and I see, or this is what I expect, I can confirm the payment schedule, and this confirmation will generate the initial recognition transaction. Then I can post this initial recognition transaction to GL using the asset leasing journal. So if I link the lease to a fixed asset in the initial recognition transaction, it will be represented as acquisition transaction in the fixed assets, and then I will need to run the depreciation in the fixed assets module. As we will see in the in our demo, how we control this point, because as you see, we have depreciation in asset leasing and we have depreciation in the standard fixed assets module. Then the subsequent transactions in the asset leasing, if we do not have a fixed asset linked to the lease, it will be posted to ledger accounts through the asset leasing journal. If we link a vendor to a lease, the payment transaction will be generate a vendor invoice in accounts payable, and then it will be taken to the payment from the accounts payable or the payment proposal process. So as I mentioned, the integration with fixed assets many times, I would like to give you a high-level representation of the integration scenario. So as we mentioned, we have the lease ID, and this lease carry on multiple books behind it, and we can post the initial recognition, lease adjustment, payments, interest, and so on. And all these transactions are posted to general ledger. If we decided to link a fixed asset to a lease, of course, we will need to create the fixed asset ID firstly, then associate the asset ID to the lease. Then when we post the initial recognition, it will be represented as acquisition in the fixed asset side. And if we do lease adjustment, it will be represented in the fixed assets module as adjustment or acquisition adjustment. And we have impairment and asset depreciation will be disabled from the asset leasing module, because you will need to run the depreciation from the fixed assets module. And if you want to check the net book value of the asset, you will need to do this from the standard fixed assets module, not from the asset leasing. As we speak about the depreciation, and we have the depreciation in asset leasing and fixed assets. In the asset leasing, the depreciation always work on the straight line service life. And if you want to follow another depreciation method, you will need to have this link between fixed assets and asset leasing. And then you will use the standard depreciation in the standard fixed assets module, and you will not use the asset leasing. We have that in the lease import. Of course, we have data entities to import and export data from and to asset leasing. And this is the standard integration with or the standard data management that we are all know and used to use for other modules in Dynamics 365. The new piece is we can import the data from data management, and it will be imported to a staging table, not the staging table in the data management. It is a staging table in asset leasing, and this will give an option or opportunity to the user to check the data before moving it to the destination table. And this only for, we have only 3 tables that supporting this staging table in the asset leasing for this particular feature, the lease staging and the payment contract and executory cost staging. Okay, I would be moving to the module itself. So the asset leasing will be in general availability in November 2020. So it is 10 days from now, and the version will be 10.0.14, and the module will be under feature management. I have already enabled it in this environment, and you will see the module here, the asset leasing. So the workspace for the asset leasing, it will show an overview for the tiles, and you can add a new lease from here or to show all leases and give you an overview of the books not yet acquired or the books commenced this year, the open books. And this is the list of the leases we have and quick links for the setup of the leases. So let's create a new lease. So I will enter here I entered the lease description and the fair value. I would say the incremental borrowing rate is 5%. The compounding interval, I would say it is monthly. And this is the asset useful life, say it is 24 months. And here we have the for lease classification, the transfer of ownership and unique asset. Then I have the lease group. Let's say it is building. The annuity type, I would say this is annuity due. And the currency, I would say this is GBP because I'm using the GBSI legal entity, and the commencement date. Here, as I'm mentioning the currency, I would move to the financial and reporting currency exchange rate. Here we capture the exchange rate at the commencement date, and we can use the fixed rate feature if we want to change the exchange rate. The reason we are capturing the exchange rate in the initial recognition transaction, it will be posted on the exchange rate at the commencement date, and all depreciation transactions will be posted using the same exchange rate at the commencement date. The payment transaction and interest transactions will use the spot rate. I would move to payment schedule lines or the payment contract. We have the start date, and it is copied from the commencement date. And this is the period interval. Let's say I will have this lease for 24 months. The end date is calculated automatically. My payment frequency is I will pay 1,000 each month. And then I will move to executory cost or the administration cost or expenses. So if you have expenses are not subject to be capitalized on the right of use asset, like the common area maintenance, utilities, and so on, it could be recorded here. So I would say I will have the full 24 months. I will have a monthly payment 500 and offset account. I can define it to be posted to ledger or to vendor. I would say this would be posted to a vendor. Then we have financial dimensions. If I want to default a financial dimension on the lease. Then we have the address and location. So these information do not have impact or financial impact on the lease, even the executory cost details and contract details. Okay. I have skipped also one tab, the index rate. Here in the index rate, if I want to run index rate each month for this lease, let's say I will change the index rate here 50% to ensure it will be run. And it is copied here in the payment schedule line. So before I move out from this form, I would like to show you the setup of the lease group. So in the lease group, we can associate multiple books for each group. And in the book, we can see the posting layer, the lease type, the accounting framework, the lease term, threshold, and the present value. So based on these percentages, the system will classify the lease, either it is finance lease or operating lease. So in this environment, I did not set up the short-term threshold or the low value threshold. If I want to link this particular book payment transactions to accounts payable or to a vendor, I need to switch this toggle to yes, pay to vendor. But I will not do this for this demonstration because we have the executory cost will be posted to a vendor. So it is it's not dependent on this one. It is independent. Okay. So also we have the additional asset considerations, the initial right of use asset, the lease incentive, prepayments, dismantling cost. Those amounts could be capitalized or impact the right of use asset account, and it will use the or to be posted directly to the right of use asset account and use lease increase or decrease posting time. And we have the same for liability consideration, we have residual value guarantee. So to make it simple, I would just want to create the schedule. So at the moment I have created the schedule, I will move to the books. I have 2 books have been created to this lease. And at this moment, the system calculated the initial right of use asset or the present value. And here we have the lease classification test. And in the lease classification test, we have the lease type. The system determined the lease type as finance lease based on the thresholds that I gave for the percentage for the lease term and present value. And the system made the calculation based on the data I have entered in the uh, lease creation process. So it divided the lease term over the asset life and compare it to the threshold percentage that defined in the book, and doing the same for the present value. So let's say I would link this book, the US GAAP, to a fixed asset. And as you see, once I selected fixed asset number, the system will show this message to telling the user the asset depreciation, asset transactions, and impairment need to be processed within the fixed asset module. And the relevant functionalities will be disabled in the asset leasing. So once I will save the record, you will see here the asset depreciation schedule will be disabled and the impairment as well as the asset transaction. So I would move to payment schedule, and here I have the periods, and we have the months, 24 months, and the payment amount for each month. We have the lease payment and the present value of the lease payment. If everything looks fine for me, I would confirm the schedule. Once I confirm the schedule, the system will recalculate the amounts in the liability amortization. And if I do not link the fixed asset, and we will see this, we can see the same, the IFRS. If I would do the same, confirm the schedule, and it will recalculate the amounts in the lease liability and the depreciation. So I will try to move between both of them in parallel just to show you the different views of the 2 different books. One is integrated with fixed assets and the other one is not. So let's start with the US GAAP. So now I have the initial recognition transaction. I would create the journal, moving to asset leasing journal. And this is a surface or a surface view or an easy form to post the generated transaction. So, and it shows you the journal header and the debit and the credit side. So here we have the fixed asset as an account, and we have the credit side, the lease liability account. When I post this transaction and I move to fixed assets and move to the asset book, so this fixed asset is open. and I have the acquisition transaction with the same amount. I would move back to my lease, and I will do the initial recognition for the IFRS. Initial recognition as leasing journal. If I want to see the classical view of the journal, I can click here, journal details, lines, and I would see the classic view of the journal. And we have the debit to the right of use asset and credit to lease liability. Of course, I would be able to post from here. So as you see, the lease transaction or the asset leasing journals, you cannot create a new journal manually. All journals should be created through the lease schedules. And as we are speaking to the asset leasing journal, I would jump to the journal names setup. And as you see, we have the journal type as asset leasing. So how the system determined to use this particular journal? I would move to setup asset leasing parameters where we have the journal name. So this journal name is used for initial recognition, and this journal name used for the lease monthly transaction, and of course the invoice journal. I will duplicate this one because I want to go back again to the parameters, but now let's move to our lease. So I went to lease summary and selected my lease ID, books. And now I'm ready to post the subsequent transactions of this lease. And to be precise, for this lease book. Here in the liability amortization, I have the beginning balance, which equals the initial right of use asset, and the system calculated the interest amount that will be posted for each period. So let's create a journal here. And after I create journal, the journal number associated to the line. And then I have identification if this journal is posted or reversed. I can do the same for payment schedule. And it's just a journal creation. I did not post them yet. And then the depreciation schedule. Here in the depreciation schedule, I'm able to access the asset depreciation schedule because this particular book is not linked to a fixed asset. I would create a journal. And as you see here in the asset depreciation schedule, we have captured the exchange rates. And this exchange rate will be used for all subsequent transactions, all subsequent depreciation till the end of lease term. And of course, this exchange rate equals the or as same as the exchange rate at commencement date. Here you can view the accounting currency amount and reporting currency. So we have decided to make them on checkboxes to avoid a lot of scrolling left and right. Moving back to the asset journals. Here, this is the interest transaction, and this is the payment transaction. So in the interest, this is the interest expense, and this is the liability, lease liability account. And in the payment, I debit or decrease the liability account, and the other side is the notes payable or accounts payable clearing account, and finally the depreciation. Now I have posted all transactions for first month of this lease book, and I can check the current lease balance. So the balance of the right of use asset or the asset balance, we have the initial recognition and the right of use asset depreciation or the accumulated depreciation we have, and this is the asset balance. Moving to liability transactions, we have the initial recognition. Because this is the liability side, we see it in a negative, increased by the interest transaction and decreased by the payment. And we have the lease liability balance. If I want to check the posted voucher, you can see voucher transaction, and it will show me the debit and credit side of the posted voucher. If I want to reverse the transaction, I can reverse it from this button. Moving to the expense schedule. So here I will post this expense to this vendor, and this will show us how the system create a vendor invoice from the lease. At this time, I will move to invoice journals, and here debiting the expense account and crediting the vendor. I will post this transaction, and I will move to the vendor by jumping to view details, transactions, and I have the transaction here. It is shown in the vendor transaction form. I would jump back to my asset leasing. Of course, I can run the same transactions for the US GAAP book by posting the liability amortization payment. But of course, I will not be able to generate the depreciation. It should be run through the standard depreciation proposal from the fixed assets module. So let's assume we are, after the first month, we want to adjust this lease and change the interest rate from 5% to 6%. So first here, I would say I will remove the payment schedule line, change the modification date, which will be used as the new commencement date, but when we do the adjustment, it's called modification date, and I would change the incremental borrowing rate from 5 to 6. And I will create schedule. Oh, I forget the payment line. For the payment schedule line, I need to do it for months, 3 months. Payment amount and create schedule. So here the system will do the same logic to run the classification test, the initial right of use asset calculation. And here, if we move to the payment schedule, you will see we have a different amount. I would confirm, and it will start in February 2020. I confirm the schedule. And here it will be adjustment. And this is the determined or the adjustment amount. I post. What I want to show you in this adjustment, we have the book version history, and this is the same that you can see in the lease itself. We keep history of the books. So in this book, we have borrowing rate as 5%, and this active book, which identified by yes, and this is book number 2, and we have the borrowing rate as 6. I would move to run the index revaluation. Before moving to the index revaluation, all the transactions that I have created manually, you can create them by batch journal, by identifying if it is payment, and you can identify the lease group or the book ID itself, and identify from to date, and then it will run in the background as a batch job. So no need to move one by one. I just want to show you the look and feel of the module itself. So let's say I would run the index revaluation. So, and I will run it across all leases. What I want to represent here for the index revaluation for the IFRS, it will impact the right of use asset and lease liability, and it will be translated as an adjustment transaction. And for US GAAP, it will be represented as variable payment adjustment for the subsequent or the future payments. So when I click OK, it will be posted. If I want to check the IFRS or the adjusted IFRS book, it was related to the lease number 1. I can check it from asset journals. And this is the adjustment transactions that debited the right of use asset and credited the lease liability. And also it is shown here in the asset transactions as lease adjustment increase. I would jump back to our lease we have created in this demo. And move to books, the US GAAP, payment schedule. And as you see here, we have the variable payment have been created for all subsequent periods. So to show you how it will look like, I will create a payment journal for March, and I can jump to the journal from here, lines, and I have this transaction debiting the lease liability, and this credit the clearing account, this notes payable account, and this account is the variable payment for finance leases. As we are speaking about accounts and how the system determine those accounts, under the asset leasing parameters, we have the lease accounts for all type of transactions. For leases, we identify the finance lease account and operating lease. And you can here identify the posting profile by book type, and of course, table, group, and all. And this is as same as in other modules in Dynamics 365. And in this first step, we identify the expense accounts or the executory cost accounts by expense type. And the expense types are configurable, so you can define whatever you want in the expense types from asset leasing expense types. So moving back to periodic journals. So if you can create the lease, and then you want to confirm multiple leases in batch, you can do this from this batch job. And if you import the lease ID or the lease master, and this will not create the lease book, because while creating the lease book, we need the system to run the classification test, the calculation of the right of use asset. So it should be run through the create schedule batch job. So you import the master lease or the lease ID, and then run the create schedule batch job from here. So I would show you the importing framework. I used the template for the lease staging tables that I mentioned to you, and imported it from the data management. Moving to data management. And I have imported the lease staging and payment contract staging. Okay, and then these imported records created this import in the staging, and I can see the records that I have. So it could be an already existing records that I need to update. And the system gave me the capability. And here I identify the import process type, either it is a new record or adjust record or update a record. And I can do the needed manual updates before migrate or move these records from this staging to the actual tables. And before doing that, I can see the difference. So for this record, this column represents the old values and this represents the new values. And I can change the new values as I want. Of course, I will not be able to change the old values, but this gives me a view of the difference between the imported record and the already existing record. So this is the most of what I want to show you today as an overview of the asset leasing. So thank you, and it's open for Q&A. Unfortunately, I was not monitoring the Q&A. Avinash?
We got one question, Mohamed, that is still unanswered. So question is, do monthly lease entries have to be posted individually?
No, it could be posted through batch jobs.
So a couple of other questions are about whether the licensing is available from the standard Dynamics 365 Finance, and then you also already covered the general availability of November 2020. The build, the release is 10 of 14.
Yep, cool. Okay, we are at the top of hour. So hand it back to you, Evan.
Perfect. Thank you, Mohamed. We would like to get your feedback on today's session. I've posted a link to a short survey in the Q&A panel. We value your feedback and welcome your input on how we did today and what you would like to see in future sessions. That survey scores on a scale from 1 to 5, with 5 being the highest score possible, and we thank you for your participation in that. As a reminder, the recording of today's session will be available on the TechTalk's Community Dynamics page within 5 business days. I'd like to extend a big thank you to our presenters and a thank you to our audience for logging in and joining us today. Please stay safe and have a great rest of your day or evening wherever you are. Goodbye.